Hi there, everyone. It's Christophe Choo with Coldwell Banker Global Luxury Real Estate in Beverly Hills. And today I have the honor to have my friend and mortgage broker, Mark Cohen from Cohen Financial here in Beverly Hills, to speak to us a little bit more about what's going on in the interest rate world. I don't know about you, Mark, but interest rates are one of the top topics of conversation in real estate today. And just so you guys know, Mark is the #1 mortgage originator in the United States. He's done over 22,000 loans in his career with his company and over $15 billion in volume. Mark is my go-to guy. He's really an amazing guy, and he just always gets the job done. He's accessible, available, and he knows his stuff. So I thought let's talk a little bit just kind of what's going on in the rate market, because obviously, a year ago today, rates were in the low threes, under three, and today we're in the fives and sixes. So have you seen a lot of sticker shock from your clients with that?
I have. It's sort of wearing off, but yes, it's been Christophe, you're right. It's been a historic year in the bond market, and it started gaining momentum at the end of last year when the Fed was stating that inflation was a transitory issue, and lo and behold, they were quite wrong on that, and they realized that in March when the inflation numbers kept on getting bigger and bigger, or larger and larger. And it's been a whole host of 75 basis point increases since for the last 6 months. So rates have moved up markedly, but there's signs that things are changing today. And as you ask me more questions, I'll go into what I see with the market, and all is not lost, and there's still a lot of activity.
In the world of real estate, as you know, there's always a lot of rumors, and you hear people talking, especially on social media. They're like, rates are going to go up to the nines. They're going to go up to 10%. I don't personally feel that's going to happen, but I guess no one really knows. Sure. And the Feds have raised rates 4 times in the last 12 months, or is it 5 times?
5 times.
5 times. Wow.
Yeah, let's see. They raised in December. No, December's not yet though. But November, October, it's like 375 basis points of rate increases this year.
And do you think that's going to continue on? And is it really helping to cool down the inflation?
It depends on, there's a whole way to look at the inflation numbers and so forth. So yes, it has helped. If you remember last year, the price of oil, for example, was 6 months ago in June was $7 a gallon in LA. Obviously much higher than national average, but now it's 5.25. So you've seen deflationary pressures like that. Shipping costs have come down. Article in the paper yesterday about the price of chickens, it's dropped 70%. So and fabrics and other types of commodities, the inflation numbers are down. And it's been shown in the last 3 or 4 reports. But the Fed, when you can analyze numbers any way you want. And what the Fed's focusing on is, well, the last 12 numbers, the average is this. Well, yes, there was inflation of 1% a month, or on an annual basis, 12%, 11%. But if you look at the last 3 or 4 months, the inflation numbers are the 2 to 3, 3.5% range. So things have changed. It's a matter of the way you want to look at the optics of the situation. And so their job is, so the inflation numbers are better, but there's a lot more that has to go for the Fed to really have a neutral policy.
Got it. It seems to me with rates, I mean, I've been in the business, you've been in business as long as I have, if not longer. I've been 33, so around the same time. And I know you and I both recall the late 80s and where the rates were 16, 17%. Sure. But, I was young and dumb at 18. I didn't know any better. I just thought that's what rates were. So, the last, 10 years, we've been in single digit rates.
Yeah.
So, I think just particularly the consumers now are generally younger, and they just have no concept of double-digit, interest rates. So all of a sudden, rates went up a point. I don't want to buy. But when you don't buy houses because of interest rates. You buy houses because you need a home. You need a bigger home, a smaller home. You need a bigger backyard. You need, your family's expanding, or you're downsizing. So that's why people buy. People aren't buying because of interest rates. Right. One of the things I find that's so interesting about rates today, which I've never seen before, is your jumbo rates, I think, are right now in the 5.75 range, right?
Yes, right in that range, yes.
In that range. But yet the lower balance loans are higher interest rates, which is kind of the reverse of what you would expect. Because in the past, always it seemed like the super jumbo loans were always higher rates, but now they're not. What's creating that and causing that?
Well, the Fannie Mae loans, the ones that you were just referring to, those are sponsored by the government. They're government loans, and they've made it no secret that they want to have get out of the market. So
Okay.
they're trying to push get out of the market by having higher rates and having all these add-ons to the products. But they don't understand, and it's a big problem, that if the Fannie Mae, I don't think it's going to happen, but if they exited the market, there would be pure chaos in the housing market because banks can't control the volume that they generate in numbers is so high that no conglomerate of banks could handle what needs to fund the housing market. So they'll always, I think, stay an important part of the market, Fannie Mae. But at the same point in time, though, you know, you pay for those types of loans. They're expensive, and they don't want to do, investment properties, huge add-ons. They don't want to do cash out refinances, second homes, nothing. So if you do it, you're paying for it. So that's why the jumbo market, which now is loan amounts over 726. It just changed yesterday, by the way. You get my flyer.
The loan amounts went down?
Yeah, the Fannie Mae loan limits were just changed to $726,000.
Oh, from 647.
Yeah, 647 to 726.
Got it. So they went up.
That's good for the housing market.
Got it.
But that's going to affect the market in a positive way.
What percentage, having you mentioned that, what percentage of loans in America are based by the government versus private lenders?
I'd say, we're jaded out here. We're in the jumbo area here. Obviously, the East Coast, New York, and certain parts of Florida. But the bulk of the loans nationwide are Fannie Mae loans. I'm not sure the exact percentage, but it's the bulk of the loans.
Yeah, it's interesting because in my 33 years, I've never done an FHA loan or a VA loan because those price ranges and properties just simply don't exist in our marketplace. So
yeah, very few. I mean, VA loans. I've done a few, nothing major. FHA, I do, maybe one or two every 2 months. Those are a little bit easier criteria, but very restrictive on what they do. So it's towards lower priced homes.
And getting loans today versus a year ago or 2 years ago, is it continue to be easier? I know it's not like it was before the crash where they were just giving loans to anyone. The qualifications are still relatively rigid from my experience. But are you seeing it softening? You seeing it about the same? Or are the lenders being tighter with their qualifications and rules and regulations?
I think that it's about the same. Banks. It all depends with who the borrower is. On private banking loans, if you have cash at the bank and you're strong financially, they want to do loans. They want relationships, but they also want depository relationships because that's where the money is. Banks make very little on mortgages, so they want relationships. So that's the key that you have to understand. But the underwriting criteria, it's the same. It's pretty much the same. Just common sense underwriting.
Private lending, which is an important point in our luxury market, obviously. And I remember when you and I did our first private lending loan back with our mutual friend and client about 4 or 5 years ago, he was going to pay cash for a house over 10 million. And all of a sudden, 2 days into escrow, he's like, no, I'm going to get a loan with Mark. And I'm like, great. And I'm like, how are we going to close this deal in 10 days, right? Yeah. And you got a private loan, got it approved in like a day, and we closed, I think, in a week or 10 days. And there was not even an appraisal. It was just so simple. Do you have to really just have a lot of money to have that relationship, or is it because of your relationship with the banks? Or
well, it's a combination of everything. I have some very close relationships with a lot of private banking. That's what has really benefited me in the last over my career, but especially in the last 6 months. It's private banking relationships, one.
Right.
And two, loan to value. They like on these hard money loans or private party loans, they'll do this automated valuation. They're pretty easy to obtain. And, people know these guys specialize in areas, so you know what a house is worth. So
Right.
it depends on the situation.
Yeah. So Lawrence Yun, the chief economist for the National Association of Realtors, in his last update, I think a couple of weeks ago, he's basically saying that I think second quarter of 2023 sees rates coming down pretty aggressively. I don't know how we can really tell that kind of thing. Do you feel rates what do you see the rates like? We're kind of in the
So this is what I see. This is a very important week. Starting in 45 minutes, Chairman Powell is going to be speaking about the economy. And if you remember last time he spoke in Jackson Hole at the meeting in late August, it was not a pretty sight. His first words, he said, "Let me unequivocally state that I'm going to fight inflation no matter what it takes."
Right.
That sent the markets reeling to a large extent. Now, what's happened since then is a lot of, like I just previously mentioned, the inflation numbers have moderated to a good degree. Lower oil, freight, transportation, commodities, and also the jobs market has cooled off a bit. Now, the major problem with the economy, with the inflation front, is the jobs market's still hot, which I'll come back to in a second. And also, you have the wages. Wages are high. To get people to work, you got to pay.
Right.
You got to pay higher. You have to charge more for your goods and services. I think we've all experienced that. You go to restaurants, and it's everything's high. It's just
right.
So this afternoon in 45 minutes, Powell's going to be speaking about the economy. I think he's going to have still a negative attitude, but I think their work has been done. He's got what he's accomplished. So and numerous other Fed governors have come out in the last few weeks saying it's time to take a step back and slow our pace of increases.
Good.
That being said, they're still going to increase rates in this December meeting by 75 by 50 basis points. And then January and February, it's supposed to be like 25 basis points. But it's all data dependent. So this week's is important. As I said, Powell speaking tomorrow. The Fed's favorite inflation indicator, which is very important, it's called the PCE, is out, and that they watch that. So how depending on that it goes will depend on the market. So that's inflation tomorrow. PCE it comes out 5:30 tomorrow morning. Then Friday is the monthly jobs report, which is the other thing that's affecting the market. So a survey came out today. It was a little less than expected. So I think the housing market's the jobs market's still pretty strong, and people are looking for help. So we'll see. But in the next 48 hours, a lot's going to be told about the direction of bonds, at least for the next month. So we'll see through the end of the year.
And you foresee the next few months rates being increased again by the Feds, probably?
They're going to increase the rates, but that doesn't necessarily mean that mortgage rates are going up, because you have a very unique situation right now. It's called it's just actually in the Wall Street Journal this morning. So basically, in layman's terms, you have the Fed borrows money at for different time increments: 2 years, 5 years, 7 years, 10 years. So a 2-year bond today sells about 4.52. So if I want to give the government my money for 2 years, they'll pay me 4.5%. If I want to give it to them for 10 years, it's 3.75%. Well, how does that make sense? How does that make sense? Because for longer term, I should be getting higher yield, but we have what's called inverse relationship, where short-term money is higher than long-term money. So invariably, not most of the time, and the vast majority of the time, it means a recession's on the way. And it's been like this for quite a while. So, talking to CEOs, Jamie Dimon, and other people, there's a strong possibility that we are in a recession now, and it's going to continue. That's why you have this inverted yield curve, because people, long-term bond market players, don't believe that the inflation is going to be as bad, and the economy is going to slow down, and the Fed's going to have to lower rates at some point in time.
Yes.
So we're in the 8th inning of the game here. You just got to play it out. There's no quick solution to having this problem resolved.
Right.
Wants to see numbers that show that the economy is slowing down, the inflation front, wage front, and so forth. So it's just economic timeframes and numbers.
And I'm sure you're seeing
I think it is.
Yeah, we're starting to see creative sellers where they're offering to buy down rates for potential buyers, like they'll pay a point or two as opposed to reducing their price to get them a better loan rate. But one thing I've seen recently in the last few weeks, which I thought was quite interesting, I've seen some lenders, and you and I talked about this, that get your loan now, buy your house, and when rates go down, they'll refinance you with no fees and no points. Is that really going on?
Yeah, I mean, yeah, on the conforming loans, it's easy because those rates are in the 6.5 range, and it's easy. It just depends. I mean, we can use 0 point loans, but as well. But you got to read the fine line in those things, because then no points, no fees, and the rates are going to be a little bit higher. So
Okay.
I do it for my clients on a make sense situation. But yes, that is a popular thing. A lot of clients are going to refinance once they got like 5 7/8 or so. Yeah, I think rates 9 to 15 months from now will be in the mid 4s. They're not going back to where they were before, but
Right.
in the mid 4s, I think is a plausible number. Then it will make sense to refinance.
And you think we'll see any rate drops between now and the next 12 months, or not really? It's going to be
I do. I do. I think rates have come down a little bit recently. It's today's and the rest of the week's data is very, very important.
yeah.
It's going to lay that's sort of the finishing touches for the rest of the year. So,
Yeah.
and the
I
markets.
remember a few weeks ago, rates went down almost half a point on your rate sheets, and I'm like,
Yeah, they did.
rates are on sale, but now
Yeah,
they went back
exactly.
up again.
Yeah, tad up. They're just drifting. Look, the markets are very, very and very, very volatile. And one of the reasons for the volatility is that the trading is very, very thin. Not a lot of heavy volume. So a lot of people are sitting this out here. Um,
When should a borrower lock in their rate? When they first talk to you and make the application? When is the right time to, I mean,
Basically, to lock the better programs in, you have to have the property under contract.
okay,
And those types of deals, the jumbo loans, I mean, the rates, look, they fluctuate a grand total of an eighth to quarter point, and that dollar's dollar. Don't get me wrong.
right.
They fluctuated an eighth to quarter point in the last 2 months, up and down. So we can lock the programs in for 75 days, and there's a good provision where I get the rate lower if rates go lower.
So you can lock it for 75 days. That was going to be my next question, the length of time. But if rates go lower, you can get the lower rate, but you're not locked into a higher rate if it goes higher.
Right, that's right.
Got it. So it's really a win-win for a
Yeah,
borrower.
it is, and it does work out well.
Yeah. And in terms of timeframes for getting jumbo loans today, I mean, obviously it depends on the borrower and how quickly they get the information to you. But
I'm
still,
closing deals in 30 days. I've got close relationship with the number 5 or 6 size bank in the US. They have a presence in LA, but they don't have any physical offices. And I'm closing a lot of jumbo loans in 3 weeks. And he's a partner of mine. And so 3.5 weeks on large jumbo deals, and I'm talking $4 or $5 million deals. So we work well as a team together. So it just depends. But as you know, in business, the more organized I am, which I'm pretty organized, I hope so this time, and the clients are with giving us information up front, and not telling us that there's this property that I own that it was not my tax returns. So as long as there's transparency, things can work pretty quickly.
yeah. The last loan you and I did, which was a foreign national loan, that was done in about 30 days.
Yeah.
So that was nice that we were able to do that. So
Yeah, nice guy. Yeah, that worked out well. And that's the advantage of using me, because I was going through Union Bank, one of my major clients for 25 years, and I just didn't feel comfortable with talking to them in the deal. I
remember.
stuff. I just don't feel comfortable with this. This is going to work out. Now
That's why we switched to kind of midstream. Yeah.
Yeah, so I changed it. Yeah, like the first 4 or 5 days to a credit union, and it worked out fine. And you got even a better rate, a much better rate.
Yeah, much better. And he's very happy because the rates went up substantially since then.
Oh yeah. He's about 2 points under market right now.
That's right.
But, so that's the thing. That's the advantage of a good broker, is having the ability to evaluate things, and not just hope the deal's going to go through, because the deal at Union wouldn't go through. Not that he's not qualified, just doesn't fit their game, their ideas of what they want. But yeah, so that's it's important to have a good broker who has a lot of available resources.
Yeah. And I'm not seeing a lot of borrowers at this point in time yet looking for adjustable loans. Are you seeing a lot of that?
Uh, Popular right now, the most popular loans are 7 and 10 year fixed rates. Because
Really?
rates on the jumbo rates, let's say 5 and 7/8, 6%. So people, I can get 7 year deals, 5.25, 5 3/8, and so people are of the belief that rates will come down at some point in time, and they'll be refinancing it. So
Right.
that's basically what
Right.
the plan is for most people right now.
And also, that's one of the first questions I ask my clients, because oftentimes, not oftentimes, but a fair amount of time, certain buyers, they know they're only going to be in this particular house for 5 or 6 years
Right.
because they plan to move back east, or they're here for a job for a certain period of time. So, the adjustable rates are usually very good for those situations because they're getting at a lower price and they know already up front they're not going to be there for a long time. So
Right.
it's a good opportunity. Yes. What advice are you giving to borrowers today, or agents, does that matter, in terms of helping guide their clients through the initial feels like, oh, I don't want to buy, the rates are too high. Well, we'll just wait and see what happens.
Well, that's a good question. First of all, buying a house is an emotional item, so you have to be in love with the house. So
Right.
you don't buy a house just for the sake of it. So you gotta find something. And how hard is it, to find something that you actually like? So that's your job, and you do a good job at that. But you got to find the right house. Then you find a way to make it work. Somebody just told me the other day, and it's sort of true. You date your loan and you marry your house.
True. True.
And so, there'll be times to refinance. And like I told you, rates in the fives, everybody wants the lowest rate. I get it, and so forth. But there'll be opportunities along the way. Nothing moves, in one direction the whole time. So, if you're stuck for a couple of years, if you were, in the five, so be it. Then, if you can't afford the extra $1,000 a month, then you shouldn't really be buying the house.
Exactly. Yeah. That's the one thing I always tell people, because you
rates gotta just cut in other ways, and we all waste money in ways that it's hard to believe. But I'm no.
I remember when we bought our first house, we actually spent probably 30% more than we initially budgeted to buy, but we found a house we really liked, and it was much higher, better location.
Yeah.
And I just said to my wife, I said, no matter what, we can afford the mortgage. And I said, all we have to do is go to a couple less dinners a month, and then we're fine,
Yeah.
And we did. And, luckily the house has appreciated 4 or 5 times since then. So it was well worth it.
Very nice house, I know for a fact. Yeah, you're right. So you just have to cut. And so the whole thing is to find a house you like. It's hard to do that.
Yeah.
And then you make it work. And like I said, you can refinancing. It's not a big deal to do. And, it's good for the borrower and for us. And it's a win-win situation for everybody.
Yeah. And just like hiring the right real estate agent, and trust, know, like, and trust. You're one of those guys that I know, like, and trust. I mean, I get so many emails every single day from mortgage brokers I don't even know asking me for business. And it's like, why would I even talk to you? I've never met you, and you ask me for loans, but you and I go back a long way. And I love it where, like, some of my foreign clients, they're texting us like 11:30 midnight and you're responding,
I'm around.
How often do people do that?
You and I have a passion together for the business. So
exactly.
I love my clients, and it's been very good for me, this business, and met a lot of people, and I have no complaints about my career. Yeah, you gotta have a passion, and same thing. I get solicited by tons of lenders, and I feel comfortable with 6 or 7 I do work with, depending on the situation. And you know what? And not that I'm not open-minded, but you got to feel comfortable and know that you can always rely on people to do things and be there for you. It's really important in personal and business.
Well, I'm very comfortable with you. My clients have all been very comfortable with you, and they love you. We all do, because you're all around great in everything you do, and we appreciate that. So it's the holiday season coming, so hopefully things will be good today. I know you want to get on that, watch that news and see what's going on, and then maybe we'll plan sometime early in January, February, do another little update and see what's going on.
Yeah, we should have a lot more clarity after the first of the year. But right now, I think the market, in a quick synopsis, I'm pleasantly surprised at the resilience of the market. People want to buy here. I have a whole bunch of clients who are looking to buy houses, and they're buyers, and I think volume for myself is off 25%, which is a fair number, so I can't complain about it. But I'm optimistic. People want to be here in Southern California. It's a great place to be, and You know, so I don't, you know, the bashing in Los Angeles, yes, we have our issues, but at the end of the day, people want to live here. I mean, look at the weather
Look,
last
every
week.
city has its issues, but like you said, I think overall, I'll take LA any day over any other city in the country.
Yeah, exactly. Look at the last weekend's weather.
Yeah.
That answers the question right
Exactly.
there, right?
Exactly. And I ask clients, I'm like, what do you want to live here? I love the weather. So, you know, that's definitely one of the big reasons.
And I'll let you run. My favorite place in the city is I go running down there is in Palisades Park on
Mhm.
Ocean and San Vicente, just in that
Yep.
park there,
Yep.
overlooking the ocean, and you know, running down there. It's just so nice, and so it's a quintessential LA
Yeah.
place. So it's, you know,
Well, I've got a condo for
you have a
sale
lot
at the
to
201 Ocean Tower. So if you know anyone, or if you want a little pied a terre on the
here
beach.
too. All right, I noticed you.
Anyways, thank you for
All right,
everything, Mark. I
my pleasure.
appreciate it. We'll talk later about the new client I referred you yesterday. We'll get
Yeah.
them. I'm meeting them this afternoon. And thank you for everything. And we'll talk in a couple
Pleasure.
months, and have a
God,
great holiday.
God bless.
Thanks for
Thank you.
sharing.
Thank you. Take care.
Okay.
Son. Thank
Take
you.
care.